Are you tired of watching your money sit idle in a checking account? If so, then now's the time to take control and start growing your wealth. In this video, I'm going to walk you through the steps to becoming a successful investor in Airbnb real estate. I'm going to show you how to find the best properties, set competitive prices, and manage the listings to maximize your profits. And by the end of the video, you have all the tools and knowledge you're going to need to start building your portfolio and creating passive income streams. If you're new to my channel, I'm Dr. Jeff Anzalone, a periodontist on a mission to help you escape the rat race and achieve financial freedom with passive income. My team and I have put together a guide to help you get started on this journey, and it's available with the link below this video. Let's get started. One of the hottest asset classes in real estate involves Airbnb investment property. The good news is that you can do this passively via a syndication or a real estate fund, or you can do it as an active investor. Now, why should we even consider Airbnb property? Whenever I tell my friends about an upcoming trip, one of the first questions that they ask is, are you staying in a hotel or Airbnb? Actually, the idea for Airbnb started in 2008 by two industrial engineers, Brian Chesky and Joe Gebbia, who actually recently moved to San Francisco. Now, to make money, the pair began renting out their apartment to people who couldn't find hotels to stay at while attending nearby trade shows. They quickly saw a potential market for the idea, and they developed a website back then called airbedandbreakfast.com. Since then, Airbnb has become one of the best places for online vacation rentals. They connect both property managers or real estate investors and travelers in one place. Now, due to their popularity, the site has started to catch the attention of real estate investors. Now, one of their strategies involves investing in Airbnb property with options to either rent it to short-term tenants, flipping it, or rent it to long-term tenants. Now, many high-income professionals, physicians, dentists, attorneys, etc., they're considering Airbnb investments to develop a couple of things. They want to develop extra passive income streams because typically they are focused on one, their active income only, and number two, Airbnb investments also allow them to benefit from all the tax advantages real estate gives you. Now let's talk about the 5 steps to finding the best Airbnb property. Now, again, whether you choose to invest actively or passively, these 5 steps are going to help you or the general partner or the syndicator find the best properties. The first one is with any type of real estate. It's location, location, location. Now, that's one of the top factors to consider, again, with real estate, especially when you're considering Airbnb listings. Questions to ask about a potential investment is this in a popular location? Like Vegas, LA, Orlando, something like that. What type of visitors will be coming to this property? Is it going to be locals? Is it going to be people for business travelers? Is it going to be tourists, etc.? How many tourists visit this area annually? Has this number over the last year or two, has this number of tourists visiting gone up or down? Is this in a desirable area? Is this a high demand area? Ideally, the key would be finding locations where visitors are present year-round. A couple examples would be cities known for holding major events, sports, conferences, etc., concerts. If it's in a location near a city center, if it's got beaches, national parks, etc. A location also involves identifying cities that allow Airbnb investments to begin with, which leads us to number 2. You need to make sure that you know about the supporting laws and regulations. So before considering a property at Airbnb, it's a good idea to research the area laws and regulations regarding their vacation property or short-term rental. These can vary from location to location, given the fact that Airbnb rules are often based on short-term rental local laws in each location. Also, keep in mind that certain places prohibit Airbnb rentals where others might require some sort of license before you start an Airbnb business. Now, there are general rules that apply to most locations that you can use as a starting point to determine whether listings are allowed. Other things to look for include if certain locations have laws in place to govern the practice via business licensing, zoning regulation, hotel ordinances, etc. And if you need further help, you can actually go to the Airbnb website. They actually have a help center. You can click online and they can help you there. The second thing you can look for is make sure that you understand the taxation rules. Now, as there's some areas in the country that requires Airbnb to collect an occupancy tax on your behalf and others making hosts pay their taxes via their Airbnb income. Okay, so make sure you know how things are taxed. and then compliance with insurance and safety requirements. Each location has its own safety regulations for tenants, like fire exits, smoke detectors, carbon monoxide detectors, etc. Make sure that you comply and you obtain the proper insurance and ensure your guests' safety. Third is the property type. Now, it goes without saying that a good investment in Airbnb property is one that can charge premium rents, thus producing a large amount of rental income. But that's not the only factor to consider. It's also really smart to look at both the profitability and the occupancy rate. Even though you may be able to earn a decent profit with a high daily average rate, and so if you have a high ADR or average daily rate, a low occupancy rate, ideally finding a place where there's actually a balance would be better. A specific area like this is where your property could be consistently occupied, which generates a positive cash flow. Keep in mind that an occupancy rate of 100% would be great to attain, but it's just not realistic. Number 4, you want to make sure that you develop some sort of budget. Now, again, it goes without saying that creating a budget for both the property and the ongoing expenses is a must. Not only must you factor in the mortgage payments, the taxes, and insurance, but also the ongoing expenses to keep the property occupied. If done correctly, short-term rentals can be a great investment strategy, and it's best to only consider properties that fit within your budget that won't compromise your personal finances. And number 5 is analyze properties. Now, after you have your budget in mind, it's time to look for rental property, but more importantly, the right investment. A great place to start is with online listings or use a property finder tool. It would also be wise to consider maybe hiring a real estate agent to help you undertake the process, especially if this is your first time to do this. Typically, agents have access to the best deals on the real estate market, right? They can also help you by negotiating the best price, advising on the top neighborhoods to maybe look into, and informing you of these laws and regulations. Property analysis takes a lot of time and effort. And depending on what market you're targeting, there's a possibility of the property being sold before determining whether it's even worth the investment. The good news is that there's been an advancement of real estate tools such as AirDNA. You can go to airdna.com and check it out. These tools provide reliable data, giving predictive analytics, making it very efficient to grow your vacation rental business. Now, let's talk about a few of the pros and cons of an Airbnb investment. Now, as with any type of real investment, not just real estate, there's always going to be pros and cons to consider. And the number 1 pro to investing in Airbnb is the potentially high profits. Now, when comparing an Airbnb investment property versus a long-term rental, you can typically make 2 to 3 times the revenue. Now, this is one of the top advantages of implementing of an Airbnb investment strategy. Number 2 is it's a hedge to inflation. Having Airbnb property in your portfolio is also a great way to hedge against inflation, because inflation is sky high right now, if you didn't already know. Even though prices continue to go up each year, the mortgage payments that you're going to have on these properties, they stay the same, right? Owners are also able to vary the nightly rate to adjust for the changes in costs that are going to affect while you maintain the property. Number 3 has to do with Airbnb marketing. Let me explain. With regards to real estate investing, the tenants are going to pay your bill. Active investors in these properties, they typically must pay for advertising to keep the property rented out, right? One of the biggest pros you have to remember with an Airbnb property is that you're able to utilize their platform for free to list your property. They also give you some great tools such as a calendar scheduler and a customizable searches to make a great user experience for your tenants. Number 4 is lower risk. Typically, short-term rentals offer less risk versus long-term rentals. For example, if a tenant in a long-term rental, they can't pay the monthly rent, you may have to pay legal fees to evict them, and then guess what? While you're doing that, you're going to miss out on revenue. Airbnb rentals present you with lower risk because the tenants typically pay in advance, and it's easier to find a renter for a short period of time. Let's take a look at some of the cons to Airbnb investing. Number 1, unpredictable income. Unlike an apartment or other long-term rentals, short-term rentals have a more unpredictable income. So with these short-term rentals, you're never guaranteed to fill your calendar. That's why I said there's no way you can always have a 100% occupancy rate. Also, other issues could affect your booking, such as natural disaster. So for example, I know somebody with an Airbnb in the Yellowstone area. And for several months, he couldn't book his tenants due to the massive flooding that they had in the area. All right. Number two, time consuming. Now, if you plan on self-managing these properties yourself, it can take a lot of time. And managing could involve cleaning, repairs, laundry, booking tenants, answering online inquiries, etc. If you have no interest in managing yourself, then hiring a property management team is going to be the best way to go. And last but not least, and we discussed this before, is keeping up with all the laws, regulations, and the taxes. It could be difficult to navigate this depending on the location, so make sure that you either get an agent or you perform your own research before you decide in even looking at certain areas. Now, are you ready to learn more about investing in an Airbnb property like I personally invest in? Well, as a busy professional, I don't have time to do all the things like we talked about here that must be done in order to actively manage this property. So because of this, and if you've watched some of my other videos, you know that I focus on investing in real estate syndications. These allow me to focus on what I do best. For me personally, it's treating patients. For you, it's going to be whatever your main career is. That's what you spent your time, energy, your money, and your effort doing to acquire the skills, whether you're a physician, dentist, plumber, pharmacist, CRNA, engineer, attorney, whatever. That's what you know best. So by investing in these syndications, you can focus on that, making the most active income, and you take that active income and then you can invest it for passive income. Basically what you're doing is you're just cloning yourself. So if you're Sam Smith that makes $200,000 a year, but Sam Smith has to go out and treat patients, trading time for money to make that $200,000 a year, well, you want to clone another Sam Smith so you can sit at home or you can go fishing or go do whatever you want. And Sam Smith can go out each day and make that $200,000 a year. But remember, with this type of income, this is totally different income. Real estate income, passive income, it's taxed totally different. It's taxed much less than active income. That's why you normally don't need as much income to replace your active income because of the taxation. That's why I love this again. And the syndications, this is a hands-off approach that involves really nothing more than making sure that your quarterly distributions hit your bank account. That's pretty much it. So if you want to invest alongside me in some of these properties, like these Airbnb properties, click the link below the video and join the Passive Investor Circle, and hopefully we'll get to make some money together. See you there.